Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, October 5th, 2017. Seeing some potential interesting things in the market now. By potential, let's see what happens. Let's see how the day finishes. I haven't done a lot of broad market analysis lately. There just hasn't been much to report. You can see prices here. This is QQQ, virtually no volatility, just inching its way higher, slide sideways to slightly higher. The trend is still up, obviously, but we're not seeing any of these big rips and dips like we saw back here. These are, that's where swing traders position and make money and get excited. But when volatility falls, um, there's just really not a lot of opportunities, at least not in the broad market. So I continue to focus on individual stocks. However, reason I'm doing this video, there's some things to watch. Now I've covered this chart in detail. It's a daily chart of QQQ. Um, Noted the big volume surge over the last few months here, potential buying climax, especially when you zoom out and look at that on a weekly. That this bulge in volume will, appear a little more distinct, if you will. But there it is. We're still, working our way higher. We still have a divergent high, just as we had a divergent high here, each and every one followed by a correction. Could this time be different? Absolutely. Only time will tell. But there's a pretty clear pattern of the market working its way up within the primary uptrend and putting in these divergent highs, which are good for swing trades or corrections or whatever you want. Now the indicators are pointing up, as you can see here. PPO is pointing higher, as is the RSI. So there are absolutely zero signs of a sell signal yet, but we could have there's something to watch for. Now, here's what I'm watching. This little pop to new high so far has been faded, and if you look to the left, you see quite a bit of a couple reactions there. In fact, let me zoom into the 60-minute chart. This shows it a little more clear. Um, 60-minute chart of QQQ. You can see, again, a series of divergent highs and divergent lows. You go long on these divergent lows. Those are your, indication that a trend reversal is coming. Usually, it's not, all the lines aren't drawn on this particular board that I have here, but usually there's a trend line to follow. It gives you a sell signal or a buy signal. And so you had a divergent high, divergent low, rally, divergent high, followed by a pullback, nice little pullback. That pullback terminated in a divergent low. I pointed out at the time there was no RSI divergent, but you did have divergence here on the PPO as well as the 1333 histogram. And then that was followed, of course, by a rally. Took us up here. That rally terminated in, once again, a divergent high. So, from a swing trade perspective, as I often talk about, this is one of my favorite time frames, the 60-minute chart. Just look for these divergent highs and lows. We did have a pullback following this divergent high. And if you miss it, there's a line right here. We had a slightly higher high right there in price. There's your divergence line. Close to equal highs, but slightly higher. And then obviously you can see the negative divergence on the PPO and the RSI and the 1333 histogram. So there was our pullback. Now I noted in the trading room today, we didn't have any divergence at this low. Do you have to have divergence to rally? No, absolutely not. But so far we had a kickback rally. Now what's interesting, at least to me, is that kickback rally took us right up to this level here, 146.59. Let's call it 146.60. Keep in mind you're dealing with a 60-minute chart, so you want to see what happens with these 60-minute candlestick closes. And we'll count this as one, two. These are the two previous reaction highs from September. This one was a little bit lower. So we have two highs, equal highs so far, and we attempted to pop above there today. And we did it. We gapped up, we popped above it, but we failed. And that's what I've noted in the trading room. Watch this level, 146.59. So far, there's a failure to break out to new highs. I'm not going to write that off as completely bearish yet, but if we fail to move higher today and get back above that level, that is most certainly a failure. You can see so far we're working on the second 60-minute candlestick. If we fail there, at minimum, we're probably going to see a backfill of today's gap. You see these dotted lines right here. There's dashed yellow lines that denotes yesterday's close. So that would be a gap backfill around the 146 area, about a 60-cent pullback in QQQ. And if we go below there, then Let's keep an eye. We can draw a rough, not a perfect, but a rough uptrend line here, and that would come in right around the pullback there. So we do have some mild divergence, not really the type I like to see. There's no separation. It's a very small divergence, but it's worth noting. So right now, again, if we fail there, we'll have had divergence on this little pop. And like I said, we didn't have a divergent low to really give us much of a sustained rally. You know, these divergent lows here and here, this one lasted for, at least that run there, and that was a pretty healthy run, about 7.25%. And this one, again, a pretty healthy run. So far, this has just been a snapback to these previous highs. So that's it. I just wanted to point that out. This is a battleground, if you will, not the most critical battleground of the year, but a near-term technical battleground between bulls and bears. And that's that. Let's see how we close, if we get any 60-minute closes above or below, and also how we close the day. That'll be pretty telling as well. So that's the 60-minute chart. Let's just look at a few of the top components of QQQ. I always like to look at Apple. That's the largest component of both QQQ and SPY. I've highlighted this bearish rising wedge pattern with divergent high recently, and it played out. So far, we've had about I think over a 9% drop in Apple. While the rest of the market chugs on to new highs. So was this just is this a buying op in Apple? Is that it for this correction with this divergent high? And remember, these divergences were large in scope. They span from going back in February. Very clear, unmistakable divergences, clean separation on the PPO lines and the RSI. Right now, the PPO is below zero. So this is what I'm watching. I have a circle here. We are below the zero line, although Apple has you know, not done a great job. Some stocks really do a very good job of defining the trend when the PPO is above or below zero. And yes, these were down, these were corrections when we dipped below, but we've had a couple dips below that didn't really prove to be anything major. We did have a 12% correction there, and as I said, so far a 9% correction, a little bit better. But I'm watching this. We have a potential bullish crossover. And that in itself is usually a near-term buy signal on the PPO. That's when the PPO line crosses over the signal line here, then the white line. Now, I have seen instances in different various stocks and other securities where you have an attempted crossover. You can see it clearly curling up, but then you get a rejection on the cross or failed crossover, and that would be very bullish. Now, one reason I'm watching for that now is this resistance level. You can see this big gap right here. In fact, let's take it down to the 60-minute chart. Okay, here's the 60-minute chart. Same one, I showed this one before. Here is a divergent low back here in Apple. That was bullish. We rallied from there, came full circle, put in a divergent high. We had a little series of divergent highs, which really accumulated to or accounted to for one large divergent high. You can see we have mini divergent high, correction number one, C1. Divergent high number two, correction two. Divergent high number three, boom. And it's usually that third consecutive divergent high that does the trick if you have a series of divergences, that is. And that was good for that 9% or so correction so far. That was my minimum target zone, which was hit. Now I'm watching this because this minimum target zone, and again, this was from weeks or a couple months back, um, was a support zone. That's why I have a target zone instead of a hard target. And that was, you can see here, there's a big old gap right here. Actually, it's a huge gap from here to here, but we had some reactions here. So what I was doing is capturing the top of this reaction high here with this horizontal line. This is a nice former support, now resistance line, and that's where we're at right now. That line's at 155.24. I had on my daily chart before the 154-ish area being the bottom of that zone, and for the last few days we've struggled, or I should say, yeah, about a week or so, we've struggled with that zone. We're right there right now. So kind of an important inflection or technical juncture for Apple as well as QQQ. And that's where I'm going. Apple, unlike QQQ, is not, it's well off its highs, but it does have a significant technical level nonetheless. So that's it in a nutshell, the way I see it. If Apple and QQQ, and they'll probably do it together if they do it, can push up a little bit higher, then Qs have broken out to new highs, hold that breakout, and that's bullish. And then Apple, that sort of increases the chances if we can get a solid close back above this minimum target zone, or now we'll call it resistance zone today. that increases the chances that the pullback in Apple is over. And there's some resistance right there you can see, and I can even take that line a little to the left. You can see gaps all along the way. So there's the next resistance level if you're trading Apple. I did mention it as an unofficial short trade, and I had some longer term targets if it rolls back over here. So if you're short Apple, if you were short up near the highs when this before or right after this wedge broke, that's where I'd be looking to stop out somewhere around 158 or so is the resistance level there. So call it 159 to be safe. If you want to use a 60-minute close, that's probably your best option because this market has been plagued with stop raids and little intra period, whether intraday or intra candlestick pops above certain key technical levels. So again, I would look for maybe a close above 159, and that should probably get you at break even or maybe a small profit if you shorted Apple up and around the time it broke out of the wedge. And just a quick look at some of the other FANG stocks. There's Alphabet. This is Class A. You can see this is a resistance zone. I see a lot of reactions with these two lines, and Alphabet's sort of flagging there right now. There's a primary uptrend line that it's been dancing on just below. So trend is up as of now, but it's in a pretty technically precarious position if it breaks that trend line. And most importantly, this line here, it found support on this level about 920.60-ish roughly for quite a while. Microsoft, same story, flirting with this trend line. The white trend line, it dipped below it for a little bit, but then it's regained it. So far so good for Microsoft. But again, these divergences, tell me that sooner or later we're going to see a reversal here, most likely a trend reversal, unless these divergences are burned through. Right now they're not yet burned through, but the trend indicator, you can see the PPO is doing a really good job of remaining above the zero line. And again, I look at the 9 EMA, the last of the two to cross, that white line. So it's finding support and has told you the trend is bullish since all the way back here in early July. So that's something else to watch for. Is see Microsoft roll over and see the 9 EMA move down below the zero line with this divergence confirmed, and that will give us likely a pretty decent correction, I would say, all the way back to at least 67 in Microsoft, if not more. Facebook, same story, everything else, divergent highs. Has it played out yet? No, but all these other divergent highs here, 18% drop, 10% drop, 16% drop. This is the first divergent high since those last ones. And at this point, anything can happen. I'm looking at the PPO, and I could see the possibility easily, especially I don't have clean separation of that this divergence, continues to be extended for at least for a little while. And that would look something like this: another thrust higher, and then a reversal. Another thrust higher, then a reversal, and you'd have some clean divergence. So there's Facebook. Amazon broke that primary uptrend line, that important uptrend line there a while ago, and has just traded sideways. You're not going to see a meltdown or melt up in any one stock in the FANG, one of these leading, top components of QQQ, unless the index is cooperating. So this one broke down and it's trading sideways, just slightly lower. The high was back here all the way in, what was that, July? Yeah, so late July, and Amazon's been in a downtrend since, but mostly a sideways range after the initial drop. That's it. Let's one more thing I want to show you guys. XBI. I get some comments, and I know there's some members that are long or short the biotechs. This is XBI. There's a couple ETFs out there. You can use IBB or PBE as well, but XBI is really my go-to proxy. And if you're trading the leverage ones, LABU or LABD, they track the same index here, the Spiders S&P Biotech Index. So there it is, same story, divergent high. So we had a divergent high here and here. Those two resulted in corrections. This correction was very mild. This one was a little more severe right here. You can see the correction after this divergent high right there. So there we are. But we don't have anything even remotely close to a sell signal yet. In fact, the PPO, well, it's starting to roll over a little bit, as is the RSI turning down, but the potential's there. And let me show you something. This is what stands out to me. It's the posture of the holdings. Now over here to the left, on the left of my screen, I have the holdings of XBI sorted by market cap. So this doesn't necessarily mean it's in the same order of the weighting within the ETF, but it gives you a good idea. I can sort by market cap. AbbVie is a $143 billion company. Then Amgen at about 136 billion. You can see down the line. So let's just take a look at a handful of those, and we'll wrap the video up. So here's AbbVie. I don't see a whole lot in the chart, although it's had a heck of a run, pretty extended. A little divergence there. You can see that. Um, so there's one to watch. Again, it's come in it's pretty hot right now. It's pretty wound up, pretty extended. Look how overbought it got. I mean, that RSI hit. I've never even seen this. Is like, well, I won't say never seen it. 90, almost 93 on the RSI. Heck of a run. Very extended stock, but obviously in an uptrend. Just watch for that reversal. Now, Amgen. This is interesting. Amgen had it trades well to the technicals. You can see all these trend lines here, uptrends, downtrend lines, breaks are bullish of downtrend lines, breaks of uptrend lines are bearish, usually followed by corrections. So this is one that definitely trades well or responds well to the technicals. Now, what I see is this bull flag pattern. I see a flagpole right there. Here's your flagpole. We had some sideways flagging action. That's your bull flag. We broke out, but look at this candle here. And as I often say, fewer things are more bearish than a failed long side breakout or bullish breakout. So far, we're put in a pretty nasty candle, reversal candle following the breakout. It's also a bearish engulfing candle. That means it engulfs the previous 1, 2, 3 candles set so far. So that's one to watch. That isn't really good. So unless this one can giddy up and go and get back above the recent highs, you may see some downside here in Amgen, and that's one of the largest components. Celgene, this is another big one. You can see the divergences building, building, building. Negative divergences here at the most recent highs, and then boom, a pretty nasty reversal today. Look at this. Stock is down 4.5%. That's usually what a sell-off looks like in the beginning. You have a divergent high. You had a divergent high right here. Look at that big red bearish engulfing candlestick that was followed by a pretty significant correction. I mean, from that correction from the highs was about 9%. So the near-term outlook for this one in intermediate term, based on the scope of these divergences, is bearish. And I can see Celgene without batting an eye coming in all the way back down here to the 126, 28-ish level. From where we're at right now, that's still another almost 10%, 9% plus drop. Gilead, I talked about Gilead in recent months. This was a long trade idea, or at least a long setup. Maybe it was unofficial. It might have been unofficial. I don't see the price targets here. Down at the bottoms, I really like this one. We had bullish divergence, positive divergence, and it did well. Went all the way up, hit each of these targets along the way, overshot this one, and this is where I expected a reversal, and I still do. We had a momentum-fueled overshoot, came up very strong, huge green candle up through there, overshot it by a bit. And a couple month or two ago, I guess on that day, I posted that I expected to come back in and eventually give up this level. Now it's been a while. I thought it would happen a lot sooner, but we did fall back, and you can see whether I'm going to be right on that or not. It is certainly a key technical level, 81.76. Look at all the reactions after we punched up through there. We came back once, twice, 3 times, 4 times, 5 times. We sliced through it. It looked like it gave up the ghost, but there was a little stick save. The next candle the next day closed slightly below it, but we regained it again. Now, normally you might be off to the races because that level held, but we're testing it again. We're coming back. We're a little bit above it now. Bottom line, just watch that 81.76 level because if you go back to the left, it's a pretty significant level. A lot of reactions there, and my pullback target, if that level goes, is 76.48, or call it 76.50. Here's Biogen IDEC. Looks like so far 4 attempts to get through this level here. You can see one, and this is just in the last 2 years. If I go to the left of the chart, there might be more. 1, 2, 3, 4. So it's at a key technical level. Maybe it takes it out, maybe not. That's around 330. One to watch. And we'll stop here. I guess there's no reason to go through all of these. This is Regeneron. Um, what I'm looking at here, these little RL, RH, this means reaction high, reaction low. So point being, downtrend is simply defined as a series of higher highs, I'm sorry, lower highs and lower lows. So we had a reaction high, reaction low, reaction high, reaction low, reaction high, reaction low. And so what we're looking at here, maybe that pullback's over. This is certainly a very good support level here. You can see all those reactions to the left. So maybe it holds this level, maybe not. I can tell you it's at an interesting juncture right now because it's bounced off that support level and it's back testing this trend line right here. You can see that trend line which acted as support there. So um, that one, if it reverses, and especially if it takes out these reaction lows, it will also have taken out this support level. If it takes out that previous reaction low, that means that downtrend that's in place, been in place for a while, is still in play. Um, I also noted down here, the PPO crossed into bearish territory right here. We had a successful back test of the zero line right here. Again, we're talking about the 9 EMA, the white line. And so that trend indicator remains bearish as of now. So both by simple price action, the trend, as I showed here, a series of, lower lows and lower highs, as well as this trend indicator, that trend is bearish in this particular biotech stock. So we're starting to see some disintegration, not a whole lot, but some there. And there's also quite a bit priced into the charts that if we do start to roll over here in the biotechs, there may be a swing trading up. And at the very least, if you're long, maybe time to tighten up some stops. But as I always say, trade, especially with this sector, trade them all individually because, just because they're in the world of, the biotech sector, they all have different business models. They're all working on different drugs. They all have different pipelines. So, the sector might be in a bear market, but if one of these guys comes out with a blockbuster drug, it's going to really help the bottom line, and that stock can buck the trend. So, again, trade it as you want. But I think that by going over these top components as I just did, that kind of gives you an idea that what it looks to me when I look under the hood, the charts of these individual top components are a little more bearish than even the overall sector ETF, which again, that's flashing those divergences and all that, but it's trading at multi-year highs right now, not all-time highs. It still has yet to take out that 2015 high. So again, something to watch. All right, this has been Randy Finney with Right Side of the Chart, and we'll wrap it up here.